Welcome to Markets Now. I'm Michelle Rook with Brian Splitt of agmarket.net, and we are about a half hour after the USDA released the March WASDE report, and we're kind of mixed in the grains right now. And Brian, really, we saw USDA punt again on both corn and soybean domestic ending stocks as well as South American production numbers. So let's talk about a little bit about that. Corn, what did we see for adjustments on a global standpoint? Because we did get a little bit of nuance there.
Yeah, interesting adjustment. I think a lot of people were really focused on what the USDA was going to do, maybe on the domestic balance sheet, or if there was going to be some adjustments to this year's crop out of South America. But the adjustments were actually to last year's, the old crop from both Brazil and Argentina for corn. And, interestingly, you think back a year ago, and there were periods of time where estimates out of South America were dropping, yet the USDA was leaving their estimate of production kind of static. And there started to become some separation between South American agencies and the USDA. So it's kind of, it's comical that now here we are a year later and we're starting to see, the size of last year's South American crop revised lower after the fact. But a total of 3 million tons lower in Brazilian corn. Yet up 1 million in the Argentine corn. So we had a net reduction of 2 million tons overall for the old crop South American production.
All right, so that would explain a little bit about why we've had such strong demand for corn from an export perspective. I guess the question begs here, why is USDA not making any adjustments here yet on corn exports? Because they have been pacing well ahead of a year ago. When will they do that?
Well, I think you'd almost have to mentally think back to the January report to help answer that question. And that January report was a definite departure from what the trade was trading at that point because of the major yield reduction. Now, sometimes it's more of a policy or procedure type of a thing. When you see the production number drop that much, it will often be accommodated by a reduction in demand. And so for the example of the January report, we saw yield drop tremendously. Corn for export was also reduced to help offset that loss of production. So then the argument comes in, well, our export pace really at that point did not justify a reduction in corn for export. If anything, it would be the opposite. So that seemed to be more of a procedural deal. So the trade last month was looking for corn for export to be revised higher, but that would have just been too soon. They just lowered it the previous month. So I think what we're in right now is just this period where we're going to have a quarterly stock report at the end of the month here. And I think the USDA is just waiting to get through the quarterly stock report and the planting intentions that we have at the end of the month. And then they're going to then adjust some of the domestic balance sheet numbers for demand on the April WASDE report once we get the stocks. So I think they're just kind of biding time for that stocks report to come out, and then we'll see the answers later.
Yeah, that definitely makes sense. Okay, soybeans, again, no changes on U.S. or South American numbers, but we did see world ending stocks down almost 3 million metric tons. Where did that come from?
Well, we actually had increase in Chinese imports. That's a number that's been kind of floating around here, and that was increased by 2 million tons. And so it's interesting, just there were some underneath the layers changes where everybody really wanted to see what the domestic carryout was going to be. Does the USDA change, corn for export like we just talked about? We knew there really wouldn't be any yield revisions here, but it was more of a demand type of a report or a South American production for the crop that's growing right now expectation. And none of that happened. So again, we talked about some of the last year's revisions. You're changing Chinese imports here. So interestingly, you have a report where nothing happened on the production side of things for South America in the middle of their growing season, yet global stocks were reduced because of either last year or some revisions within China. So the world just did get a little bit tighter on a report that at face value was neutral.
But we have seen a lot of these private estimates on South American production coming down, especially when we look even at Brazil. When will USDA start to make those adjustments on that crop?
Well, that's a great question because here we are in March and we're seeing a revision of last year's crop. So next March, maybe, I don't know. But it's one of those things where they've been rather steadfast. The crop that is grown that everyone has focused on for the last several months is that Brazilian soybean crop. And we're going to be thinking about their safrinha corn crop here very soon. But the USDA started at 169 million tons. We talked about in the month of December, maybe seeing something in the mid to upper 170s when weather looked really good. That's when in the month of December, beans went and made some contract lows. Then we started to get some concerns in Argentina, some other concerns in Brazil about planting delays, too much rain. And we saw some of those production estimates come back down. The USDA has just been static the whole time at 169. I don't know. Maybe they've been right. Maybe that is about where we're at the whole time. But if today's report does say anything as if they're not right, we may not know about it for a while.
That's true. The wheat market did not get any help from the report today. U.S. ending stocks and world ending stocks were both raised here. And I think the surprise is that we didn't see a revision down in the Russian crop, right?
Yeah, that was our own internal bias, is that if there was any changes on the world balance sheet for wheat, that we would have seen the Russian crop reduced in size. We did not have that take place. Instead, we had the USDA change our domestic balance sheet in a bearish way, but in two directions. They reduced our exports, so our wheat for export, and then they also increased our wheat for import. So the two combined raised our domestic carryout for wheat, which was really counter to what we were thinking. We really didn't think there'd be much as far as domestic changes, but again, focused on some of the global, what we felt would be some global reductions in production. So maybe that's yet to come. But again, USDA has maybe established a pattern of sometimes some of the global production estimates outside of the U.S. of being very slow to change those numbers until there's a high level of confidence.
So the biggest information that's going to move the market is actually starting to come in front of us here. April 2nd, we might get tariffs on Mexico, Canada, maybe reciprocal tariffs, but the bigger thing's going to be, as you said, acreage and stocks. And so is the market going to start working in higher corn acres here already?
Yeah, so I mean, I think we got kind of our first look at what a balance sheet would look like from the February Outlook Forum of 94 million acres and a trend line yield. And, we can debate what the demand numbers are that they're using, but when we think about the end of the month and what type of acreage number we're going to receive, a lot of the anecdotal conversations about seed sales and this and that, the price of cotton, the price of beans, what's profitable, still leads to the idea of corn potentially seeing a large acreage number, whether it's north of the 94 that they showed in the February Outlook Forum, maybe it's 95. But I don't think that the reason that the funds built that extreme long position in corn has changed dramatically unless we do spiral into more of a trade war. So far, it's been, kind of tit for tat here, but nothing too major. If the export pace really doesn't change for corn, and if anything, it needs to slow down a little bit to be at USDA's numbers. So that's what we kind of alluded to, where the funds got very long for a reason. They got spooked out of a large portion of that because of this trade talk. But that underlying bullish factor is still there. So as we go into the weather season, I know there's an awful lot of talk about, the ongoing dryness that we've had in a lot of the growing regions, kind of this drought that's crept from Mexico up north into southern southwest Texas, and how does that evolve in the next couple months? And there's a lot of statistics going on around right now about the planting prices, our February price average, and we get a shot of selling at that price or higher down the road. So it just doesn't seem like right now you have to be super worked up about protecting the downside. I'm not going to say there's not downside risk in the market in the short term, but it seems like there's a lot of things lining up where we should be able to have a little bit of patience in the market and look for some opportunity down the road for some higher prices for both old and new crop down the pipeline here.
Speaking of old crop, quarterly stocks, do you think when we get to the end of this month, we may see less stocks than a year ago just because maybe farmer selling has been a little more aggressive, or not?
I would imagine the on-farm stocks number is going to be down quite a bit year over year. We had just a different setup last year. And if you think back to late February a year ago, there was just this downward bias from fall. We had a lot of basis contracts that were coming due. There was a lot of bushels that were just getting priced right at the end of February last year. And I think a lot of the bushels moved quite a bit sooner this production cycle versus last year. So yes, I think on farm is going to be down. I think the amount in commercial is going to be up. That's one of the recipes for sometimes a good rally to take place, is the idea of the product being in strong hands. And I didn't come up with that. It's just, but the strong hands are the commercial hands. So when you have a good amount of the stocks in commercial hands, that does tend to give us some underlying support to the marketplace. And again, I just think with a lot of things coming up here, I mean, you look at the balance sheet for the February outlook form on new crop, and use a trend line yield, which we haven't actually grown before, and you use 94 million acres, we're still barely scratching 2 billion bushels.
Right.
So if the old crop stocks come down a little bit here, I think we still have a good friendly story down the road, and we can see the funds build that link back up.
All righty. Thanks so much. That is Brian Splitt with agmarket.net and Markets Now.